Hello, everyone, and welcome to another episode of Why People Do What They Do, where we speak to talented and accomplished individuals from various fields. Now, today we have Tong Mun Yee, who is an IPO advisor. He founded and he's currently running Axial Capital. He advises companies throughout their journey ahead of their IPO listing through a very interesting area through culture building. So we're going to explore his business, how he got into the space, and why culture. Hi, Tong. How are you?
Good afternoon. Hi. I'm fine. Nice
There's
day.
thunder
Can hear some
behind.
thunder behind. Yes.
Tong, tell us a little bit about your background and how you got into the business.
Yeah. So let me start a bit by how I envision my how I envision the services at Axial Capital to
Yeah.
be. We like to see that we inspire possibilities that the business owners can achieve their dreams for their business. Everybody's got a dream when they start their business,
Mm.
and sometimes the owners find that maybe it's not possible. We like to inspire the fact that they can achieve it. It's a possibility that can be achieved. So, a bit about myself. I graduated from the University of Glasgow in 1995, Scotland, with an accounting and finance degree. So, as in most accounting and finance grad, I started working in an audit firm. It was a big four audit firm, doing audit and compliance work. And in 2000, an investment bank headhunted me, and that's where I spent my next 4 years learning how to structure listing plans, as well as how to do mergers and acquisition exercises for listed companies. So during my tenure in the investment bank, the 4 years, I discovered that actually there was a gap between business owners' expectation of what a listing exercise is supposed to be and an investment bank's expectation of what a listing exercise is supposed to be. So it is quite a huge gap. So and that's where I had an idea of doing a business specializing just fulfilling this expectation gap, helping them meet the expectation gap. So in 2004, I founded Axial Capital with this belief, along with a former customer of mine, a close mentor of mine. Um, and then that's how I found my calling, so to say.
For people who are not familiar with the term, tell us, can you explain what is an initial public offering or IPO as it stands, and why do companies go through this exercise?
Yeah. So, as the term initial connotes, it is
Mm,
the first time you're doing it.
mm,
So, a company undergoing an IPO exercise or initial public offering exercise is able to offer its shares, uh, or, or or even instruments like debt instrument and IOU, so to speak, to the public. The public are people that are not related to them, people like you and me who don't run the company but are interested in buying whatever the company is buying a share in the company to partake in its profit. So you can offer your shares through a regulated market. In most of the countries, they are called the stock exchange. Okay, and however, because the risk to a public like you and me who are usually not involved in the operations of the business exists when we buy a share in a company, right? Therefore, many of these regulated markets, they actually have compliance requirements for a candidate company who wishes to raise money from the public through their markets,
mm.
right? So a company uh, who undergoes this for the first time, we call it an IPO exercise lah.
And why do companies want to go through this IPO exercise? And I'm asking this because, yes, whenever companies list, it's always a big deal. It's like, oh, okay, now it's you are expanding. So we associate the term listing with expansion. But I remember, this casual conversation that I had with an entrepreneur once, this lady, and she mentioned that, you know, I would like to one day list or get funds from venture capitalists, but at the same time, I'm a little apprehensive because I don't want to give up my independence or give up my control. So why would companies want to go through this exercise? Where do they strike the balance between expanding and also not losing the control that they have? Because for founders, they it's sweat equity, it's their money, that they started the business from nothing.
Yeah, true. And you're right. It's what most of the business owners go through.
Yeah.
Okay. Um, However, it can be structured. Like not there will be some loss of control, of course,
Mm,
because a person is putting in money. So you have a loss of control, but he decides where the money goes through. But usually, if it's structured properly, it's to the extent. However, there are many other reasons. There's a large variety of reasons why people want to go for listing. Of course, the first and foremost is like what you have just mentioned. Usually people would like to raise money other than through bank borrowings. Because when
mm,
you borrow money from the bank, a property gets charged. So that's not very ideal to continue borrowing money. You can borrow money from the public also, but it has to be through a regulated stock exchange.
mm,
But there are other also reasons that comes in also. Uh, s- uh, it is a form of for me it is a form of recognition that your company is a world class company. In fact, the statistic in Malaysia is less than 1% of the SMEs in Malaysia is listed. So when you are listed, technically you are on top there, 1%.
mm,
So along with recognition and the whole world, when they look at companies, they all know that the whole world understands that a listed company is a company that's stabilized, listed on the stock exchange. So it brings along a lot of benefits. Like global brand recognition, you get better supplier terms. Customers are able to find you just by logging into different website stock exchange websites. You are listed there. They can actually draw out information about you,
mm,
compliance information, and they have better trust in you. Okay, it is also a way to create business legacy that extends over many generations. If your son and or grandchildren are inheriting business, what better way to get them on a correct footing than if your business is has access already to more than just banks to borrow money. They have
mm,
access to the public funds, and many of the highly skilled management, they are attracted to listed companies because listed companies are able to, as part of their program, have a share, have a reward system that rides on their shares. Their shares are tradable on the market, so it's money, right? So that allows the highly skilled employees or officers to actually have a sense of ownership in the company compared
mm.
to a family-owned private company, lah, right? And yeah, that's about the few reasons. One, a form of recognition. Two, it creates actually a very sustainable legacy over many generations. Three, you can create strong cultures by allowing employees to feel ownership of the company. They partake in the ownership of the company, bond the companies together. You create loyal employees. And lastly, of course, the most popular reason, raise money from the public.
Yeah, and I think that there's also a lot of compliance as well, because then you have to report your financials to the public. There's that element of transparency that would need to be adhered to. On that note of culture, Tong, but before we get into that, you mentioned that there was a mismatch of expectations when you were still debating to start your company, when you realized there was a mismatch of expectations when you were an investment banker, and that was when you got inspired to start your company, Axial Capital, years ago.
Yeah.
Tell us what that mismatch of expectations are.
Okay. So the mismatch comes about because the mechanisms that operate in a listed company or a company that needs to borrow money from the public, right, has an additional dimension more than just a private owned company.
Okay.
In many private owned companies, that's across the world, not only just that is in Malaysia, no, it's across the world. Business owners and shareholders are usually one and the same people, and they are accountable only to themselves.
Yeah.
If I make a wrong investment decision, at the end of the day, I myself am hurt. That's all, only, right? But when you borrow money from the public, people who are not doing operations, they are just there to invest because they like your story, but they are not involved in the day-to-day operations. Therefore, taking money from them also comes along with the responsibility that you have to report to them. Right? They have to know when something happens that makes your shares less attractive, and they might want to consider not investing anymore or selling off the shares anymore. This is what we call corporate governance. They have to be transparent, like what you just pointed out, and they have to exhibit a degree of corporate governance. So, and this is the mismatch. Okay, to put in enough, to put in a whole suite of corporate governance controls, okay, to change the mindset of the business owner from a private owned entity to an entity that has got public shareholders who are totally not related to him, who don't run his business, how to report to them on time. So the many business owners expect somebody to help them place it up. Many of the private owned entities. The investment banks, because of the fact that they have to remain independent as an independent advisor, right? They cannot be too involved in structuring all this. If as you structure it, of course, it's very difficult then for you to make an opinion that is the most optimum structure. So this mismatch requires that somebody has to bridge this gap, and I found that this gap is quite huge. So a specialized company, I dreamt of a program of bridging this gap, and that's how I started this business.
And for founders as well, they have that. Right now, they have shareholders to be accountable to, right?
Yes.
Okay. Give us a snapshot of what your day to day is like as an IPO advisor. What aspects of the job do you enjoy most? Aspects of the job that you know, when you started, you enjoy until today.
Yeah, nice question. I like the term advisor and not consultant.
Oh, why is that?
Yeah, because at Axial, we like to see that we inspire business owners, like what I pointed out, uh, to the possibility that their dreams for their business, they spend many years building their business, and actually each business owner, I believe, has a dream of their business, whether it's to get worldwide recognition or to have access to public funds or to create a legacy that extends many generations. This dream is actually very possible, and we like to as an advisor, I like to find that I'm coaching or mentoring them to inspire that possibility, and as they are inspired, they work towards that possibility, and that possibility can be achieved. So one way to achieve this dream is through an IPO exercise for us, because an IPO exercise allows you to have transcended to a certain level where public trusts you to invest in you, to lend you their money, right? So over the 17 years in our business, actually we have developed a program that helps business owner to build this unique culture for their company to help them achieve their dreams. um, and this is what I like, uh, doing this business. For me, this is actually living my dream. I inspire people. I feel very happy when actually, and I do get that when my customers actually introduce me to their business colleague as the guy who mentored me to what I am today. So I feel that very, I like that feeling. I like to help people, and this is why I do what I do, to mentor people.
Mm. And it's not a quick win, right, Dong? I think we spoke about it, and it's not a program that lasts for 6 months or 1 year. It is an arduous journey. Can you take us through, take the audience through, like how it can go up from, it can be anywhere between 2 years to 4 years.
Yeah,
It's like a
3 years.
preparation journey before the company lists.
Correct.
Yeah.
Um, Well, a very good analogy would be this way. We want to go. We want to be fit, so we pay for the membership for a gym, right? But actually, all the equipments are there, you know, and if you don't know what the equipments are used for, it's no use. So we hire a coach to help us through it, right? The coach runs you through a program, right? So we have to do it systematically, and that's what it entails at the end of the day. This coaching program, right, takes 3 to 4 years, because remember, it is not easy to build a company. A coaching program in and includes also putting in many systems that are not relevant to a private entity but highly relevant to a public company, right? So systems like that takes a while to put in, because I believe that such a system, it has to be seamless to your company operations, so that there's no mismatch between what you are actually doing and what that system needs to achieve.
Mm.
So the only time can make things like that seamless, because why? The company is made out of people and processes. Once we put in a new process, they have to get used to it, they have to run it, and then we have to pick up and improve the process as we go along. Yeah, so from our experience, it takes about 2 to 4 years.
Mm. And the focal area that you zoom in on, and something that an area that is most important according to you for a company in their preparation journey before they list, is culture. So how did you recognize this from the beginning? Was it intentional on your part when you started your company, like, okay, I'm going to have this company where we're going to zoom in on culture, or was it accidental? Tell us about that story.
Uh, well, to a certain extent, I wouldn't say it's accidental lah. Maybe it's more evolutionary.
Okay.
See, we evolved with it. Nah.
Mm,
So yes, when I started in 2004, right, it was just, let's get them listed on a stock exchange, right? But then we also knew that um, uh, having a listing plan by itself, a tactic to list, what to do during a listing, how many shares to issue, what's the price like, what kind of share structure, is not the beginning. Before that, we actually have to consider what is the company's growth strategy is going to be, and what they intend to use that listing program to be. So we realized from the beginning that we had to start somewhere more than just the listing plan. We had to build towards a listing plan, and then during the initial years when we started, it was about, there was a high emphasis on looking at the strategies. Okay, having a
mm,
good strategy will allow you to be able to achieve higher possibility of successful listing plan, because you have a strategy instead. So, but over the years, it's 17 years already. I've been doing this. We realized that there was something special, and that's what some of our customers told us. There's something special about what you do. There's a high degree of success in this program that you are doing. Okay, and always me and my partner, we were always wondering if there was a way to shorten the program, right, to make it more efficient, and we couldn't get it shorter. Couldn't
mm.
get it shorter,
So you were
and
thinking like from 2 to 4 years to maybe 1 year.
no, more like 2 to 4 years to 2 years. We just do two
Okay.
years.
Yeah.
No 3 years, no 4 years. Just do it 2 years.
Mm,
But we found that makes the program not that it will disrupt the integrity of the program.
okay.
Even though we try to shorten it, but somehow when our customers run through the program, they require that at least the 3 to 4 years sometime
Mm,
to get it done, and then customers also sometimes approach us to conduct sessions with certain departments, which we felt was very essential in our program. We broke our program down into multiple modules, and many of these modules move from one part of a business to another part, like sales,
mm.
and then production, and then accounting and finance, human resource. And some of the customers then pointed to us that we were essentially like coaching them to do it. And then over the last 4 years, I've been involved in a networking program that
Mm,
practices collaboration, right?
okay.
And studying that program gave me a very good insight to what I was doing. It allowed me to rewrite vision skills. So I always laugh at my partners, and we always have a private joke, even though it was 14 years, the old dog learns new things also in the business that he has done for 14 years. Okay. I like as a saying they had, Peter Drucker was always pointed out to be quoted in this network that I joined in. Peter Drucker says, culture eats strategy for breakfast. And looking at it, lunch and dinner. So they said, looking at it, it wasn't about a diet plan or which is more delicious food or not, but I think he means a culture actually trumps strategy. And that was when I realized, it all clicked into place.
Mm.
That was when I realized this was actually why we were so good at what we were doing.
Mm.
Essentially, we were building cultures. And that is why we couldn't condense the program. A 10 to 15-year-old company trying to realign its culture is not going to be a 1 or 2 year
Yeah,
program
because
to
they're so
realign.
embedded in the way they do things already, right? It's not easy to just either overhaul or make major changes to the culture.
Correct.
Mm.
So to a certain extent, I believe this was the main key to our principle. We were actually doing culture building, and I believe that
Mm.
it's very unique. Many people find it difficult to build cultures. I believe that we have found a way to build sustainable cultures.
Mm. And the outcome of that strengthening of internal culture, would you say that it enables the whole company across different departments to speak in one voice?
Yeah, correct.
Yeah.
And that's what alignment's about. Because during an IPO exercise, right, the authorities and the people who create the due diligence team, who check, who 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 writes reports, they actually do not only question the owners, they also question various essential parts, the heads of the various essential parts of the businesses, like the production manager.
Mm.
They talk to the accountant, sometimes even going down into the accounts clerk.
Mm.
They talk to the human resource admin clerk, human resource executive, human resource manager. And all these people have to talk the same language. They have to understand the overlying values that, or the vision and mission that the top management, the founders of the company believe in, and they have to understand how is that reflective
Mm.
in their business, in their jobs and responsibility that they are doing.
Mm.
Because if there's a mismatch, then it's very easy for all the for the people who are writing the report to actually spot this mismatch. You know, the common comment is they are not doing what they say they are doing.
Mm. Okay. Have you ever faced situations where there is, a lot of push to your program because people might come to you and they have this aspiration to want to list, but it seems like a lot of work. You have to put in the hours, you have to make changes within your team. Have you ever faced any push from the founders to say, what, I can't do this anymore, this is too much, there's too much work, this is not what I envisioned it to be, this is not how I planned it to be or anticipated?
Well, in the first place, we were quite fortunate because we
Mm.
were living. I think we were living primarily on referrals. So the first challenge was the first case, and the first case came from a very close contact of mine.
Mm.
And as they say, once you have a success under your belt, things become easier and easier. People talk about you, and then people who come in, right? They have a mindset, actually a program that they want to achieve it already.
Mm. So they're
But
ready
yes,
to work. They're ready to put in the work.
correct.
Mm.
What we do face, however, it's in the first place, not 3 years or 4 years. I want it next year or 2 years.
Mm.
Okay. So, but the way we approach it is very friendly. We actually do a quick run through on the whole system, and that is usually done within the first month of our of us engaging with them, right? And we will then list down. We will do a gap expectation a program. So we list down all the gaps that are in existence, and generally we just ask them like, if you can fulfill this gap in 1 year, you can go for listing lah.
Mm.
But you cannot skip the gap lah. We will not allow, or we will not encourage our customers to skip the gap. They have to maintain the gap if they want to follow us through the program. So if they can fulfill the gap within a year and they can show us in programming in a way how they can work with us in a year to fulfill the gap, then why not? But certain things need time. So after going through the modules and looking through the gaps, most of the time, they do settle between 3 years. Okay, the only reason why customers went for 4 years, right?
Mm.
For some of our cases was because they, after undergoing our program, they understand where the value lies. So what happened in those two cases was, if they delayed the listing by another year, the values go double. So I don't ask them to delay. Instead, they are actually asking me if can I delay and I still continue with your program. Are you okay with that? So those are the things where we think if the customers can get more valuation, why not?
Right.
It's their company after all.
Because it's contingent on the environment as well, right? When you
Yes,
invite them to list. Okay.
correct.
It seems like a very methodical approach that you and your team are taking, right, Dong? What type of skill sets do you think um, that is important for people who would like to venture in this area, and which have brought you through your 17 years in Axial Capital?
Well, I think as for one, you must really like to mentor and coach people.
Mm.
Right? So as a mentor and coach, I think the primary skills, of course, listening. Because no two business owners are the same. So there are always things that make them what they are. So we all programs are customized to a certain extent, and because of the difference in their belief, right, cultures are also different,
Mm.
right, and because culture is also different, the program to build these cultures are also different.
Mm.
So primarily, I think is listening skills. I've also been told by my customers that we have very good time management skills. But of course, it is a time management program, 3 to 4 years, and we always meet the 3 to 4 years. Uh, um, we There will always be the fear that if we tell them 3 years and they cannot make it in 3 years, right, then it's considered a failing outside. So we've been very lucky, like we have not had that situation yet.
Mm.
We always are able to deliver what we told them. So customers do say that we have very fantastic time management skills because of that.
What are the metrics of success for you when it comes to getting your clients listed? So for you, is it like you said, meeting those timeline, um, or getting their culture in a direction that is acceptable for compliance and in preparation for them listed? What are the metrics of success?
Yeah. So uh, when each customer signs up with our culture building mentoring program, right?
Mhm.
There's a series of success uh, markers that they have. One of the success markers that is very visible for us, it's that at a point of time after the program, right, we are able to invite investment bankers to come and see them, and those investment bankers themselves will give a view to the customers whether they are listable or not, by sometimes even offering offer letters for appointment. Mm. So and that is usually the main key indicator that we use, and we tell the clients that at the end of this program, you are ready for listing. What I will do is I will invite investment bankers to come and see
Okay.
you, right,
Mm.
and then you can listen to them.
Mm.
Tell you what you already know. Your company is actually qualified for a listing
Mm.
process.
But you get them ready ahead of all these
Yes, correct.
process.
It's the
Okay.
prep.
Mm. It's the prep work that's always the groundwork, the legwork that's always the hardest and the most difficult. Yeah. What are the prerequisites, Tong, for a company to get listed?
Okay. I know in the market there's a lot of quantitative prerequisites. Okay, but I believe it's not so quantitative.
Mm. That's why you focus on culture, right? Because it's so
Yeah,
intangible. Yeah.
correct. I think there's only one chapter out of 20 chapters that focuses on quantitative. There are 19 chapters, and these are all the qualitative chapter. For me, the overall prerequisite is that the company has to have a healthy culture that that champions sustainable business model. Okay, it has to be growth focused. So you have to show you have to exhibit growth potential. Okay, and lastly, I think everybody in the company, right, and that's where culture becomes very important, has to have this value add approach to the company. Every job or role they do, every decision they make, all the way up to the executive level, has to add value to the company.
Right.
So there must be an alignment also between all this, because a value add decision from a top management is definitely different from a value add decision from, let's say, the accountant, right? All of this have to be aligned. They have to move in one direction. So this is where the culture building program helps.
Right. And where do you think companies should be at that point in their growth planning, right? At what point do you think they would be ready to take the first step to say that, okay, I see myself listing in 4 years, 5 years, and then they take the necessary first steps, the preliminary steps to do the prep work?
Um, so for the business owners, right, when we start our business, I think we always knew uh, what was the business used for, right? So there must be a dream to grow it. Okay, so at that point of time, you believe that your business is scalable, right? And it can be grown, right? And you need to expand. That is the first time where I believe that the business owners might want to consider the possibility of embarking on an IPO exercise.
I only ask this because, speaking and knowing a number of business owners, entrepreneurs, it's always easy to get lost in the day to day, right? Like they would have their growth planning, but as they move on, the day gets lost from us, right? And you're just focused on the doing, and sometimes it's just so hard to see the big picture, or where do I see the company in 5 to 10 years. Yeah.
Mhm.
And then in prepping for an IPO, also it takes 2 to 4 years to get the culture right. So yeah, it's just an interesting thing that we think about when it comes to planning and the growth strategy. um, we when we talk about how you got here, and such a complex space to be in, a very niche industry, who actually, is there one person or a number of individuals that inspired you to embark on this particular space? Because you mentioned that accounting and finance, when you didn't know what do you always know that you wanted to do finance? When we talk about how you got here, and such a complex.
No, actually, when I did accounting and finance, it was because um, I wanted to do business. So again,
Have you
uh,
always wanted to do business?
yeah, I always wanted to own a business or to do a
Okay.
business, right? Yeah.
Mm.
I was somehow told that we should do finance, because finance is the blood of business. You have to understand finance in whatever business you run. So it's either economics or accounting and finance. But actually, what really inspired me to move into this field was it was actually a book I read. It was highly popular at my time in 1990s. It's called Barbarians at the Gate. It
Oh,
was about Nabisco and how they grew, and then how they made a subsequent series of wrong investments, and they fell apart. RGR Reynolds, Nabisco. It was written by Brian Burrow or John Haler. Okay,
mm,
this what I wasn't interested in the story. What I was interested in was the people inside who were actually corporate structurers and corporate advisors. And
oh,
some of
okay.
them were value creators. Okay. Yeah, of course, at the end of the day, it was like cowboy. They actually broke the companies apart to create more values for each other. So at that point of time, actually, I was studying I was still doing my degree, and I thought this was where I want to be. I want to be a corporate structure, somebody who helps dream of structures and do value creation, right?
Mm.
And that's why I when I came up, and then somebody told me that if you want to get exposure, right, you either go to the bank or you go to an audit firm. Why don't you go to an audit firm? Because these are all multinationals. They give you plenty of exposure. Went to the audit firm. Subsequently, when the investment bank asked me to join them, I also took that route because those people who were corporate structurers were actually investment bankers. And I, at that point of time, didn't really know what it meant. Just
Mm.
had to go through it. Currently, I also draw a lot of inspiration from the collaborative network that I have. It's after so many years, it's the first time I find a very unique collaborative network where we practice helping each other.
Right.
The founder is Dr. Ivan Meister, and I also draw inspiration from the national director for Malaysia, Marcus Huang.
Mm.
I understand what was so interesting about this culture, about this network. Um, they emphasized in the beginning culture building. So it started a while back, and I think they did it correctly. Dr. Ivan Meister did it correctly. He started by building correct cultures first, and then he went to expand upon that culture. And
Mm.
he taught me the concept of core values and how important the culture is. And the light bulb rang in my head, like when I participated 4 years ago.
Mm.
And suddenly I knew what I was doing was correct. We were actually building cultures.
Right. So you draw on that inspiration as well, or that realization of
Yes.
collaborative approaches into your day to day as an IPO advisor.
Yes.
Mm. Okay. You work with a lot of entrepreneurs, business owners, founders of companies, right? That want to bring their companies to the next level. And we are definitely living through these very interesting times. What are some of the challenges that are most common, most prominent in this part of the region as compared to other parts in the world?
That was very interesting that you bring it up.
Mm.
Actually, Malaysia has got a lot of host of very nice new technologies. Okay,
Okay.
just that we never hear of it actually, because the thing about this part of the world, it's not only in Malaysia. I think it's the whole Southeast Asia region. Right? We tend to have very conservative funders, right? So many of these technologies, they find challenges trying to get funding for their technology. The funding is either too small or it is very harsh because they do not understand that technology is about trial and error,
Mm.
right? You have to sometimes try 10 times and get that final bit of technology, but somebody has to fund you for that 10 times lah. Huh?
Mm.
And and this is the challenge, I think, especially in this region of the world, and the region, our financial environment, right? We tend to be more conservative. We want results before we make investment decisions, and so it becomes a chicken and egg situation for these new technologies. They don't have results, but to get results, they need money, and then they can show you the results.
Mm.
Um, so m- my dream is that this program that I have, right, to a certain extent, to help business owners like this, and over the past 17 years, the companies that we have listed, they are actually to a certain extent representing all these technologies or novel way of doing businesses that would have been very challenging to raise money from the bank, except if you go for an IPO and you have that route to raise money from the public.
Mm. So what you're saying is that we are actually in this part of the world, we are not short on innovations and
Yes,
innovators that are creating, but we may be short on the kind of
funding
funding
available.
that we need.
Yes. And
Yeah,
I believe IPO might be an answer to all this,
right.
getting this on the stock
Is,
exchange.
is this an ideal environment right now that for companies to list? Or how is the environment looking like? What's the appetite like out there?
Well, despite what everybody says about the economy, right?
Mm.
Uh, a country's fund is actually grounded a lot in the total collection of taxpayers' money,
Mm.
a lot of duties imposed, and the government does collect them. So there is actually a lot of funds in the market. what I do believe is that there's just not enough good uh, investment targets. So once a good investment targets come, they always find very good funds. In a Over the past 5 years, which was considered to be uh, one of our lows in our economic cycles, right?
Mm-hmm.
Our two customers have been able to raise in total close to 60-70 million ringgit from the stock exchange, through IPO exercises.
Mm-hmm.
So and this is what we observe also from our listing. Despite the economic situation, as long as the company is able to have a focused storyline that people believe there is growth potential, you are able to be very clear what you are actually doing, and you are very clear what you want to do with the public money, as to how you want to expand your business. I believe there's always a lot of investors available.
Right. And are there, and for these companies that you work with, are there specific industries that they come from? Are there any um, certain areas, right? Industry sectors that you specialize in, or that you encourage, when it comes to these companies seeking your advice? Or
Thank you for that question. It's very
the
nice.
darling
Yeah.
of stock exchange,
Yeah,
yeah, the darling
correct.
stocks.
Yeah, the blue eye boys of the stock exchange.
Yeah.
Yeah, we tend to be predisposed towards companies who are technology based.
Mm,
So how do we know they are technology based? We do ask them if they have any research and development inside, and we are looking at their research and development worksheets.
mm,
We like that they are manufacturing something from these technologies, because if you manufacture something, it is tangible. It is easy then to show the bankers, the authorities, what it is you do. Something you can
mm,
hold. We also like the fact, if the companies, we are also predisposed to the fact if the companies are actually export based, because to a certain extent export based means all around the world somehow this company in Malaysia has got a certain niche.
mm,
The whole world have to buy from them. So we like that because it means you got that competitive edge.
mm.
So manufacturers who are in technology based industries, and they are export based, we will be very predisposed to looking and helping them understand what it means to go through an IPO exercise.
Yeah. And from your experience, these companies tend to do better and reap
Yeah.
more value from listing as well.
Correct. It's yeah, correct. They can get more value. It's
Mm,
easier for the public to understand what they do, so
mm,
it's easier for them to actually get people who are interested in buying up their shares.
okay. How do you balance, or do you balance that decision making when you take on clients, um, the weightage of where they are at now and their potential, where they will be?
Yeah, uh, we like customers who have already um, at least exhibited an export potential. Maybe their footprint has already expanded from Malaysia to the first initial another country.
Track
Uh,
record. So that's track
yeah.
record.
Yes.
Mm,
So and then at that point of time, we believe that they are ready to undergo the mentoring program,
mm,
so that the further growth will be more aligned, more planned. And for the business owners, they understand why they need to expand to those areas and what value it brings to the overall businesses, because all these are the questions that need to be considered uh, as part of the IPO building exercise.
right. Okay. What are some of the traits, Tong, that you think are essential in starting a business and building it into being a sustainable business? Because starting a business is hard in and of itself, but it is more difficult to sustain it and to grow it, right? To have that consistency. So what do you think are the traits, and what do you think are the secret recipe to making it sustainable?
Well, I always believe that the vision that the founders have. That is actually the driving point of the business. Even for our culture building program, we always start with the vision and the mission of the business founders. Okay,
Mm.
it has to be well thought out, right? It has to allow the founder to understand where he can expand to. Okay, so so and it can come not, it doesn't necessarily need to come from the beginning.
Mm.
It can come as you have already done your business and you have found your niche, that what you wanted to do. Or to a certain extent, it can be like us, where we found a niche of what we are going to do over after, like, I would think 6-7 years after we started working. Upon that realization, right? That means I would urge business owners to always look at it, always uh, ask, why are we doing this?
The why.
Uh, yes, the why of why are they in that business, and it should be something that they would like, they are able to depend on in that business as the business grows.
Mm.
So upon having that understanding, then it is very easy for us to work together to find the way to put it into the storyline.
Mm. Okay. Going back to that point of culture, right? How susceptible are um, different team members within the company? So how susceptible are the founders? So when they seek your advice, when they come to you for your program, your mentoring and performance program, how susceptible are they to follow 100% of the program, and how susceptible are the other team members? Because getting alignment is also it can be a challenge.
Yeah, correct. But surprisingly, maybe because we are Asians,
Yeah.
so I find that when I use the word culture, people actually understand what I'm trying to achieve
Oh, okay.
when I talk about culture.
Mm,
It's just that many times I think they don't know what a culture means, lah, and
mm,
that might be uh, an area where that we shine more a lot, because we have got a structured program that builds cultures for our apprentices, um, and even the lower level or staff levels, right, to a certain extent, they do like to to be in a company that treats them like a family, and that's actually culture. So
mm,
yeah, so for me, building cultures in a business for a variety of reasons, and just that is in my program, it is very focused at at the end of the day, the company achieves its objective of getting recognition by being able to go for a IPO exercise. But I believe culture building, it's very important for many companies. In fact, even at these challenging times, many of our apprentices, they use our culture building program to create sustainable businesses over the next uh, 1 or 2 uncertain years that they have. Because I do believe that if the culture is very strong, right, regardless of the um, economic situation, your company and all its stakeholders, including the employees, have vested interest in the company.
mm.
They understand what the company needs to do and why they are doing what they do, and they trust that at the end of the day, when the company picks up, the value goes back to them. And that's why I believe that why culture is actually very important.
So the relationship is not merely transactional, but it
Yeah.
goes deeper than that.
Correct.
Mm,
It's not yeah, you're right. It's not an employer-employee type of relationship. It
mm.
has to be a vested interest, a family type of relationship in the companies.
For aspiring entrepreneurs interested in to pursue a business venture, or people who are already, in their conceptual process or infancy in running their business, or people who are thinking about it, what are some of the best steps you think that they can take so that they can gain the experience and also the capital that they would need, right, to
Yeah.
expand their business or to start their business for those who are thinking about it?
Oh, that's an interesting question. Actually, I like the way that that's going. Um, for me, and maybe for some of the listeners, why why IPO exercise, right? Because for me, I think that is for all businesses, we undergo multiple life cycle or multiple business strategies. When we start a business, it was always a growth strategy. And then when competitors start coming in and we stabilize, we have some anti-competitive strategies, and we do price wars, we do expansion into different markets so that we have more control of those markets. So as in all things in business, at the end of the day, we also must plan for an exit strategy. For me, the way how are we going? So we built. So we are going to start this business, and so we know that this business is going to be very big. But at the end of the day, how are we going to exit from the business? And for me, an IPO being a regulated market represents the best source and the most possible source of exiting from the market. And the thing that over the years we have found, many of the business owners plan for IPO as plan C lah. Plan A, they will want to have their kids inherit it. Plan B, they will try to find another person to buy it at a very good price. Plan C, if all else fails, I go for IPO. I think IPO should be a plan A.
Okay.
Because kids do not necessarily want to inherit a business. A successful businessman probably sends his son or daughter to a nice university to be a lawyer or a doctor, right, or an engineer, and these are the people who are not going to repair the broken plant and machinery or work in a factory. So having a viewpoint that your kid will inherit your company is actually, for me, a very uncertain possibility. Okay. Having competitors to buy your company up at a very good price is also another funny way of looking at it. A competitor who has spent so much time competing against you, he will not buy you at your price. He will let you move away and he will eat into your market, right? Because he's inside your market anyway already.
Unless you have certain expansion points that they have been eyeing for many years.
Yes, correct. And even that, they will negotiate with you, right? So for me, a stock exchange is a very definite exit strategy. Why? Because a stock exchange doesn't grow up to be a doctor or a lawyer. It is a stock exchange, and the price of your shares is actually determined by a country's supply and demand.
Yeah.
Not a normal negotiation. We cannot actually talk about a price that's like exceedingly higher or exceedingly lower than a stock exchange. So for me, a stock exchange listing should be a plan A. And I urge all business owners to look at it that way. So if you look at it, that it should be a plan A instead of plan B and plan C. So all businesses who start, right, they should start in the first place having a preparation to make the company listable at the end.
From the time they start.
Yes, from the time they start. So one of my key success driving factors is to do everything right the first time. Because when you, and we find this in our life, so when we have to correct mistakes, it becomes very expensive because we have to reverse many things, right? So if all business owners realize that the IPO exercise is the way to go forward as an exit strategy, it tends to make sense that when we plan for a business, right, the first thing we have to plan is we will grow. Second thing is we will go for a stock exchange IPO listing, no matter it takes 10 years or 15 years. So the correct thing to do is today, all the systems that I put in, it should be actually IPO compliant.
Right.
And that's the first thing I think all the business owners should really consider. How to put in to your company systems and cultures that are IPO friendly. Because at the end of the day, you are going for an IPO.
Okay. And what would you say to those people then that would think, but I don't want to give up control of my company by going listing?
Well, the way I look at it is this way. If you have $100, right, and you control 70%, that's $70. So in IPO, we are talking about not only $100, we are probably talking about $1 million, right? 40% ownership of $1 million is still bigger than 70% ownership of $100. And that's the way I urge you to think about it. Okay, there are many controls inside the stock exchange. right? That depends a lot on the vision and mission of promoters. So rarely do promoters actually lose control. Most of the time, what we are more afraid of is the promoter leaves the company, because once a promoter leaves the company, then the vision and mission becomes impacted.
Then they
So
will have
that
to
will
question
affect the share price. Yeah,
because
correct.
of the culture, because it has
Yeah,
been weakened. Okay.
correct, correct.
Mm,
So loss of control of doing business, operational loss of control is not there. You always have operational control as a founder,
mhm,
because the stock exchange invested in you because of your vision and mission. They will probably not change
mm.
that. Uh,
Okay, that's a really articulate way of expressing that. Thank you for that. All right, Tong. Tell us where people can find out more about you, more about Axial Capital, and how they can connect with you or network with you.
yeah, true. Well, we have a website. We use the word niche because we are creating a very niche, and we do believe all the our customers who come to see us are handpicked for our program because they occupy a specified niche.
Mm,
Uh, I belong also to a bigger network that are looking at niche and also milestones. So you can I can be reached through www niche, that's niche.com.my,
mm-hmm,
right? And then every Tuesday, I'm available to meet at my collaborative network. I spend a lot of time in my customers' place. Now, even at home, I do a lot of coaching on video. But you can definitely find me every Tuesday from 7 to 8:30 at a collaborative network that I always meet in.
mm-hmm.
So again, if you reach out to me, I don't know whether should I leave my phone number.
You
You
can,
reach out to me or reach out to me through this program. I think you can reach out and find out where I meet every Tuesday.
yeah, we can leave a pinned comment at the bottom after
Yeah,
this conversation. All right. Thank you so much, Tong, for speaking with us. I've learned so much, and I hope that our audience have also learned about, um, IPO advising through your journey. So thank you so much for sharing.
pleasure.
To everyone, thank you for catching another episode of Why People Do What They Do. Like Tong said, coming from the words of Peter Drucker, culture eats strategy for breakfast. So that's something that I'm taking away from today's conversation. And of course, lots more of wise nuggets from Tong. Thank you so much for tuning in today. And if you like more, if you like content that we do, please head over to our website at www.wpdwtd.com. Until then, it has been a pleasure as always, and I'll see you in the next one. Thank you so much, Tong.
Thank you. Pleasure's mine. Bye
Take care.
bye.
Bye bye.